Alright, so by now you should know that gold, GLD or the gold futures last Friday, 30th of January had a very sharp crash. Okay, in fact, just for gold itself, dropped about 10%, okay, on a single day on a Friday. And for the silver side of things, nearly 30% in a single night as well. But okay, just want to share with you, okay, what I have gathered from the options flow, okay, about 1 to 2 weeks ago, there were already signs that the gold and the silver and the precious metal, okay, the flow were actually bearish, which means that, okay, the smart money were already positioning, okay, for a possible downside move, which I mentioned, okay, to my seasonal vantage insiders for the past 2 weeks already. So before I go into that, okay, just share with you some of the numbers, okay, I gathered, okay, from the options flow data over there. So you can see that from this slide, okay, the information, the data that I gathered was from 12th January to 23rd of January. That was about 2 weeks of data flow over here. So 2 weeks ago, okay, the equilibrium was still okay, there's still neutral sort of thing. But since last week, okay, week 2, which means last week, okay, there was a aggression, more of a possible downside move, okay. So selling actually dominates the tape, which means that there were a lot of put options, okay, or there were also a lot of call being sold as well, okay. And the net intention, the net premium was actually much negative, 174 million, okay. Comparing, as you can see that the bullish premium was 500 mil, okay, and the bearish premium was way larger, about 700 million, okay. And overall, okay, the net delta, okay, net delta meaning that overall the directional, okay, it is more towards the bearish side of things. So the net delta was about minus 13%. So to keep things simple, which means that, okay, it is a possible, okay, bearish directional move, okay. You need to remember at the point in time, okay, the gold market, okay, it is still rallying, okay, at a very fast pace, okay, it is still kept going higher, skyrocketing, okay. All right, so the signal versus noise, but short term wise, 0 to 9 days, it was actually much positive, okay, about 9 million net premium over there. But 10 to 60 days, okay, DTE, the days to expiration, so within the next 10 to 60 days, okay, in fact, it was much bearish as well, okay. All right, so there was a so-called a possible, okay, melt up last week, okay, just before it is going to come down, okay, which in fact really happened, okay, at about 455 strike over there. Later I'll go through the options flow that I mentioned to my members over there. So in fact, there was also a hard resistance sharing that, there could be a net bearish flow over here, okay. So if you don't know all these numbers, if it sounds so-called alien to you, okay, it doesn't matter, okay. I'm just telling you that, based on the options flow data, okay, it is already telling us that that is a possible, okay, that the smart money, the institution, okay, were preparing for a downside move. They were already hedging, or they were already outright bearish already, okay. So is it really 100%? Nobody knows, okay, nobody knows, but it gives us some clues, okay, that, okay, that the we need to be a little bit more careful, okay, on the gold and the precious metal as well. So net imbalance, which means that the directional flow were actually very, very bearish, about near to minus 40%, okay. All right, so there was a accelerating, okay, in the bearish premium as well over there, okay. And there's also just to keep things simple, okay, there was a downside move over there, okay. So the strategy is like sell the rip. There's a massive short call at about 440 and about 425 GLD, okay. So the bearish premium in fact outpaces the bullish flow as well. So it was a high conviction, okay, so-called bearish conviction, okay. So institutional players are bracing for a significant downside volatility into February, okay. So the smart money dominates the flow over there. So what I'm trying to say over here is that, okay, this is a summary of the options flow that I mentioned. You can see over here that the date it is actually 25th of January. Okay, you can see, okay, aggressively bearish pivot, okay, and it is the 0 to 9 DTE. It was short term, it was bullish, okay, but longer term wise, it was actually much bearish over here. So in hindsight, okay, you see, okay, that, you know, there was 126 million bullish, okay, at 455 strike, okay. Heavy call buying suggests some traders are positioning for a melt up or a short squeeze. So at that point in time, okay, when I see this so-called cluster, the prints, right, I was also a little bit skeptical of whether, sure or not, okay, it will have a melt up, a sudden rally up into the 455, above 455, okay. So if you take a look at the chart here at GLD over there, okay, so this was 455. Remember, okay, when I published this options flow, it was at on the 25th or 26th of June over there. Okay, I do this vertical line over there. So you can see that in hindsight, it was correct. Okay, there was actually a short term 0 to 9 days to expiration. DTE means days to expiration, suggests some of the smart money are positioning for a melt up, okay. So this is actually true. It actually went higher to more than $500, and after that, okay, the market just crashed downside. So what I'm trying to say that, you know, the so-called the summary, okay, since 25th of January, I've already mentioned that the GLD flow has turned decisively defensive, okay, while the retail short terms are chasing the 455 calls. The smart money, okay, has already laid out a massive short call at 440 and 425. So, and the 10 to 60 days bucket shows extreme bearish conviction, okay. So which I have already told my members, okay, for the past 2 weeks, I told them not to chase the upside, okay. Don't FOMO, don't have this fear of missing out, because when the market turns, okay, when the precious turns, okay, it can have a correction anytime, and it will be a violent one, because and when the times comes, it is very hard for you to get out. Okay, I'm just telling you that, okay, this is not 100% correct, but the options flow does give me, okay, some clues, okay, and anticipation, okay, what the market can do. I repeat, okay, it is not 100% correct, okay, but it does give me some, okay, insights of what could happen in the precious metals. So I hope that, you know, this give you some insights, okay. And of course, you're asking me what will happen, okay, after that, after aftermath, okay. So generally, okay, I don't suggest shorting right now, because after a massive so-called crash, okay, you know, it is often too late for you to sell short the market, okay. In the short term, okay, there could be some technical rebound, but how you so-called perform after that, okay, it really depends on the day-to-day basis, price action, and the flows as well. So this is just my personal opinion, okay. It doesn't mean that I'm correct, okay. So please do your own diligence. I will see you in the next video.